Alright, so once again we see a strong bullish reaction in the market with the SPY and the QQQ about to reject any possible top signal on the daily chart. So apparently this uptrend is unstoppable. However, next week 6 of the Magnificent 7 stocks will release their earnings, so we can expect an increase in volatility. And in this video, we will look at the main turning points in the market and what to expect next. And remember that everything shared here is based on technical evidence, whether you like it or not. So viewer discretion is advised. My name is Nathan. Welcome to another video here on the Finance Hydra channel. Now, as we can see here, SPY is going up today, alright? It is not a miraculous, amazing, bullish reaction, but it is a meaningful reaction because at least it is not losing yesterday's low, meaning it failed in triggering this possible top signal over here. And by breaking and closing above yesterday's high, we would completely reject this bearish candlestick pattern from yesterday, meaning the bull trend will just persist as long as we see a crystal clear top signal getting triggered. What's more, as far as I know, yesterday's reaction could be just another harmless pullback to the 21-hour EMA, the exponential moving average over here, which has been acting as a quite reliable support level for the SPY, and right now we are bouncing again, trying to recover, trying to resume the previous bull trend. Remember, the market is bullish, all right? It is a fact. The trend is bullish. We are still making higher highs, higher lows. We are still trading above the 21-day EMA over here. There is no lower highs, lower lows. There is no top signal triggered. There is no crystal clear bearish chart structure over here. Therefore, there is not a single technical evidence suggesting that SPY will correct or trigger a pullback. If we see the SPY triggering a pullback, the 574, which is very close to the 21-day EMA, is going to work as a double support area over here, and this is it, all right? So far, the bullish bias is persisting. Now, as we can see here, the QQQ is also on the verge of rejecting yesterday's bearish candle. However, today's candle is also very small. We don't see an incredible, miraculous bullish reaction, but it is at least a meaningful bullish reaction because we are avoiding a top signal over here that could make the SPY trigger a sharper correction, possibly losing the 21-day EMA, retesting the 477 again, our next technical support level, alright? So far, apparently the situation is still under control. Regarding Nvidia, the situation is a little bit more delicate because Nvidia is very close to our resistance area over here. Yesterday, it made a new all-time high. However, the 140 resistance level over here is clearly the major resistance level for Nvidia. Nvidia has to break this key point as soon as possible in order to trigger a bullish continuation chart pattern over here and avoid a top signal in this area, because if we see a top signal triggered on Nvidia over here, that will be quite problematic, all right? Meaning Nvidia could trigger a sharper correction to the 130 again, which is very close to the 21-day EMA, meaning we could drop roughly 5% over here. And this is not gonna necessarily reverse the bullish bias, because remember, my friends, pullbacks are not reversals, all right, are two different things. A pullback, while we are still in a bull trend, usually more often than not is a buying opportunity. A reversal is an opportunity to sell to short, all right? So far, a pullback could occur, but there is no top signal triggered yet. Yesterday we saw this shooting star candlestick pattern, but only one single candlestick alone is not enough to actually reverse the trend, all right? Or trigger the pullback we would like to see Nvidia making, because as far as I'm aware, a pullback over here would be just another buying opportunity, especially for those who missed buying Nvidia near its support levels over here, all right? Because guys, remember, always buy near support levels, sell near resistance levels. Do not do the inverse. Many people do the inverse, all right? They sell near support levels, they buy near resistance levels because the stock is going up. They have this fear of missing out, right? And when the stock is dropping, they want to sell because it is dropping too much, and then they sell near support levels, all right? No, here in this channel, buy near support levels, sell near resistance levels, all right? Regarding Tesla over here, Tesla is about to report earnings in 5 days, just 5 days. We are still moving sideways over here. We are not necessarily bearish yet. I mean, we are in bearish territory, but in order for Tesla to actually trigger a very good bearish reaction over here, we gotta actually lose the previous support level over here around $213, because this is what Tesla has been doing, right? Lower highs, lower lows. Right now, we are making a sideways correction. If we lose the previous support level, then all right, we're gonna probably retest our next support level around the $200 over here. But so far, we don't see any technical evidence suggesting a bearish continuation. However, there is not a single bottom signal over here as well. So Tesla, could Tesla bounce from here? Yes, it could, but there is not even one single bullish candlestick pattern over here suggesting a possible bottom signal. So we can't work with a bullish strategy just yet. This is a very complicated situation, all right? Because even if we see Tesla recovering, we have a very strong resistance area around $233 over here near the 21-day EMA, acting as a double support area, resistance area over here, all right? So in order for Tesla actually turn bullish, long-term speaking, we gotta see Tesla breaking and closing above this double resistance level on the daily chart, and then, and only then, I'll be convinced that Tesla is making a bullish reaction above the 21-week EMA over here, which is a very good, this is a very good spot for a bottom signal. Yes, it is, but so far, this reaction alone on the weekly chart is not enough to convince me, at least, that Tesla will trigger a very nice bottom signal, will trigger a very nice buy signal over here, suggesting more bullish continuation, maybe to the 265 again, which, by the way, is the most dangerous resistance level for Tesla, as we have seen here in December 2023, again, 2 times in July this year, again in September this year, all right? So we retested this level multiple times, and we failed in breaking this resistance level in all of them, all right? So 265 is the most dangerous resistance level for Tesla stock, long-term speaking, all right? But so far, mid-term speaking, on the daily chart, we have yet to see a crystal clear, meaningful bullish reaction, all right? It is not even like Nvidia, which yesterday materialized a top signal, all right? This is a shooting star, a possible shooting star candlestick pattern. Yes, it is, but we have yet to trigger this pattern. SPY materialized a bearish reaction over here yesterday. QQQ also materialized a bearish reaction, but these bearish reactions weren't triggered yet. So Tesla has not even a single bullish candlestick pattern, by the way. So this is why the situation is very complicated over here. And remember, if you wanna delve deeper into the content and learn how to trade with us using technical analysis, using the same patterns I use on my daily life over here, join our educational project, the 5% project. Here, we don't do as many do and teach you how our method works and then abandon you, right? No, you learn in practice because our shared strategies are in real time, used by a community that is skin in the game. And you can join our project for free, take advantage of the trial period, and download our exclusive ebook on technical analysis containing everything you need to know about our trading methodology, all right? You have 7 days free just to test our service, see if you like it, all right? The link to our website is in this video's description, all right? And in the fixed comment below as well. All right, so just join the 5% project for more content like this, for exclusive analysis like this. Now, AMD, I know you guys like AMD, all right, but this one is not bullish at all. All right, there is not a single bullish reaction over here. It is trading below the 21-day EMA. We are losing the previous support level at 158, so clearly it is in bearish territory. And in the absence, in the lack of technical evidence suggesting otherwise, AMD will just continue its bearish sentiment over here. Our next technical target is 148. All right, there is no, this is a fact, all right? There is not a single bottom signal over here. Nathan, what AMD needs to do in order to convince you that it is gonna go up again, all right? That could recover and seek higher levels. We need to see a very, very good bullish reaction over here as soon as possible, all right? Because it is gonna report earnings in 11 days. So we gotta see quickly a very good bullish reaction, preferably closing above the 21-day EMA over here. And then, and only then, we may see AMD retesting our next resistance level, which, by the way, is this gap over here, which is still open. We have an open gap over here, 174.53. Gaps work as magnets for the price when trends reverse, all right? So it is a classic technical target for us. It could be a very good buying opportunity, so let's see if AMD will trigger a nice buy or not. The 5% project bought AMD over here, all right? So if you ask me, there is still time to buy it, but we need to see a very good bullish reaction as soon as possible. All right, and Palantir is reacting already. I would be happier to see Palantir closer to the 21-day EMA. All right, that would be the ideal, but it is reacting already. It is quite annoying. Yes, it is. The risk reward ratio is not that optimized, especially because we are very close to the 45 resistance level, which is the all-time high resistance level, the all-time high from January 2021. All right, so almost 4 years later, Palantir is here again. So, all right, it is a technical resistance level. On the weekly chart, we see a bearish candlestick pattern, but this alone is not enough to materialize a pullback. In order to actually see a pullback, Palantir would have to lose many support levels, namely the week's low around $40.36, namely the 21-day EMA, and the $38.19 again as well. And then, and only then, we may see a sharper correction, possibly to the 21-week EMA over here, on the weekly chart, of course. So we gotta lose a few support levels in order to materialize a critical, an important pullback, long-term speaking. All right. Oh, and by the way, before I forget, if you're still watching this video for 14 minutes right now, dude, it is too late for you. You should subscribe, because here we talk about technical analysis, price action. Here you'll find daily unbiased analysis, always focusing on the technique, always talking about trading strategy through the lens of technical analysis. All right, so consider subscribing, because clearly you liked the content so far. So come on, subscribe this channel and click the like button to show me some support as well. I highly appreciate your audience. Now, as we can see here, Sofi Sofi is reacting today. It is making a bullish reaction. We have a crystal clear resistance level near the $10.49, which, as we can see here on the weekly chart, was the previous top level from December last year. Right now, it is acting as a resistance level again with an astonishing precision, right? Astonishing precision. This week's high was 10.49. This week's high over here was 10.49. Funny how technical analysis works, all right? Yes, it is a technical resistance level. Now we are losing momentum. Although today's reaction is quite good, it would be better to see Sofi materializing a sharper correction, if you ask my humble opinion, because a pullback to the 918 or maybe even to the 21-day EMA would not reverse the trend. In fact, it would be just another buying opportunity near a support level with a good risk-reward ratio. Right now, Sofi is not necessarily a good buy, but if you have Sofi over here, just fantastic, right? You can hold it. There is no technical evidence suggesting an insane pullback ahead. However, if you ask me, if we lose the previous support level on the 1 hour chart, that could be a technical bearish pivot point triggered, meaning this is gonna be a classic bearish reversal signal on the 1 hour chart, suggesting a pullback on the daily chart, all right? So watch for this key support level for now. NIO dropping, no meaningful bullish reaction. No, there is not a single bullish candlestick pattern over here. We are still below the 21-day EMA, making lower highs, lower lows on the 1 hour chart over here. In fact, the 21-hour EMA is still acting as a resistance level for us. Therefore, there is not a single bottom signal. The $4.97 is our next technical support level. We have yet to hit this key point, but so far, so good. We are still dropping. Broadcom, this one is a very good one. This one is having a very hard time in breaking the 185, which was a technical target for us because the 5% project bought this stock over here around this support level, this bullish reaction over here. It is having a very hard time in breaking the 185, which was our original target. If you ask me, by breaking the 185, Broadcom is going to trigger from a technical point of view another bullish pivot point on the weekly chart over here. All right, yes, we had a drop over here, which could be seen as a possible double bottom chart pattern, but it would be an inclined double bottom because we still see this trend line over here connecting the previous bottom levels on Broadcom. Either way, we see many bullish chart structures. On the daily chart, we also see higher highs, higher lows, right? Trading above the 21-day EMA. Only if Broadcom loses the 21-day EMA, it would technically reverse the bullish sentiment, triggering a sharper correction on the weekly chart, possibly to the 160s again. But so far, the situation is still under control. We are still above this critical support level. And the Micron Technologies, this one over here, the 5% project traded this one over here multiple times in the past. Right now, our latest buy signal was given over here because of this ignition bar, classic ignition bar above the 21-day EMA. On the 1 hour chart, you can see a quite obvious bullish pivot point triggered over here. Therefore, amazing, fantastic buy signal. However, this one has yet to reach its next resistance level. We almost got there yesterday, 114.80 cents. This is our next technical resistance level to break. If Micron actually closes below today's low over here, it could materialize, it could trigger this shooting star candlestick pattern, which is a technical reason to sell. However, if you ask me, we gotta lose the 21-hour EMA in order to actually trigger a meaningful bearish reversal chart structure on the short term on the 1 hour chart, and then materializing a pullback over here on the daily chart, all right? Therefore, we gotta watch out for the 21-hour EMA on Micron over here because it is gonna be the most important key point to watch short-term speaking. If we see it materializing a bullish reaction above the support level, fantastic. Probably we're gonna retest higher levels, breaking the 114 resistance level. Meanwhile, I'm gonna keep you guys updated every single day in this channel. Therefore, again, consider subscribing if you're not a subscriber and join the 5% project so you can boost our performance and trade without stress. Thank you for your audience, my dear friends. Stay safe. See you guys next week.